On today's Rebel's Edge, will Jay Powell's sanguine Christmas comments put the brakes on the Santa Claus rally? Micron shares slump. They exceeded expectations, but the forward guidance was not as rosy. And finally, release the hounds. SoundHound surging again. An AI audio name we've been following and telling the Rebel Nation about. We had UOA in this name. We had Squeeze Play Intel on this name. People in the Rebel Nation made bank on this. We're going to cover that and more on today's holiday session of the Rebel's Edge.
And here we go again. And the beauty of it is, I just never know who is going to be here with me. I really don't. I swear to you, I look around and, you look a little like John. I mean, you could be a brother of ours. I don't know. I mean, well, you got the hat on, so I can't see everything, and all that. But how you doing today, Mark? It's good to see you.
Doing great. We're finishing the year strong here at Market Rebellion and the Great Rebel Nation. And I am looking forward to some family time and watching the Santa Claus rally unfold as we, and I think even our friend Tom Lee, we're going to talk about that in the macro, have predicted. We got a lot to cover today. Pete, let's jump right into it.
Let's do it. We're going to start off with the macro minute, and I'm going to kick it off by saying the Fed delivered. They did what they said they were going to do. They also did one thing that I asked them not to do, which is have Jay Powell get up in front of everybody and say more than he needs to say. And that's exactly what he did yesterday. It crushed the markets. We were down 1,100 points on the Dow. I mean, that's unbelievable. But it's because he went off script. He didn't need to go there. If they're data dependent, Mark, then why does he have to say how many cuts they may or may not have next year? If you're data dependent, that means you're data dependent. And we have none of that data yet. That being said, that definitely affected the markets in a big way, at least yesterday and maybe over the next week.
Yeah, look, you know how frustrated I am with Jay Powell. I've referred to him as the feckless Fed leader, and I've been saying that for a while now. I'm surprised that Trump isn't putting more pressure on him to leave, although, as you know, that's not perhaps as easy as it sounds. And look, here's what I love, and I'm going to mention our friend Tom Lee, who may or may not be joining us at RebelCon 2025, by the way, in Vegas. I'm just going to tease everybody with that. Look how quickly these recoveries happen. You saw it. Even in the post, right? Shortly after the close, and everybody's going, oh my God, worst 10 days since the 70s, whatever. And I didn't fact check that. That sounded like an exaggeration to me, but I don't know. Maybe they were right. Look how quickly the recovery happens. That tells you the strength of the bull backwind or tailwind in this market. As Tom Lee points out in a note he put out yesterday, 3 or 4 times the S&P recovered fully within 1 week. 4 out of 4 times recovered fully in 1 month. I think we might be looking at recovering fully in 4 days. There's just too much positive data coming out, and we're going to see some of that in the earnings that we're going to cover later in the show.
Well, let's jump to those fantastic futures. I talk about volatility all the time. And by the way, let's kick this thing off with what John had to say just the other day.
There's a very large trader that these traders have nicknamed 50 Cent. That particular trader buys 50 cents worth of options at a time. Yesterday, that trader, 50 Cent, came in and bought 100,000 of the February 30 calls and then sold 100,000 of the February 60 calls. The net on that trade was right around 52 cents.
So I just want to follow that up with, when I look at volatility, Mark, and we see it all the time, this gentleman or person or whatever, 50 Cent is the reference that we always use, massive trades. And when I say massive, I'm talking about 100,000 lots and 170, 187,000 lots going in. Some of them are just trades. Some of them are spreads, but they've been absolutely amazing. And they certainly did do pretty well, I would say, yesterday when volatility went all the way up towards 28.
Yeah, look, 50 Cent is definitely one to watch. He's one of the traders that we like to talk about a lot. And, Pete, I don't understand. Why do the CNBCs of the world refer to the VIX as the fear gauge? I think that's an unfair representation. It's actually an indication of both sides of the market, not just the fear, but perhaps even the exuberance or the calm that's reflected by a low VIX. My quick futures is sort of a year in review. Have you looked at what cocoa has done this year? It's up over 300%. So, folks, if you're out there looking to buy some chocolates for your sweetie or your granny this Christmas, expect to pay a hell of a lot more.
And one of the things that people don't know about cocoa is it's actually not just for chocolates and all the wonderful
Right.
things that people like. It's also in the healthcare world. So there is demand coming from different parts of the world. And that's why it's been going up, up, up. And whether, you name it, there's been something. All right, let's just jump to those stocks that we were teasing everybody about not too long ago. Micron Technology. This is one, I was the specialist in this stock for the better part of 4, 5, 6 years on the trading floor. Massive trader. It's an absolute monster of a company. But sometimes, Mark, you've got to deliver not just the earnings themselves, but the guidance. And we talk about this all the time. And if that guidance disappoints, it doesn't really matter what you did in the previous quarter. They're going to turn and sell. And that's something we're seeing in Micron today. It's down about 17%. It's getting hit pretty hard. The guidance really actually was pretty ugly, to be honest with you. And they talked about a lack of flow for customers themselves, but AI is something that they are still driven towards. So when I look at this stock and you look at it, even year to date, it hasn't done a whole heck of a lot. What's intriguing is it still trades at just an 11 PE. So when I look at that, there still is some promise there. And I think there's still some upside. Obviously, AI is going to be big for them. If they hit it right, this is a stock that has a lot of room to the upside, but they haven't hit it right just yet.
Yeah, I totally agree. And I mean, if you pull up the year-to-date chart, as you point out, 5%. I mean, my God, we've got other companies that are in the AI space that are up 4,000%. It's like, Micron, get with it. And I think part of the reason for that, you can glean from some of the comments that accompanied these earnings. They got to get the B2B segment. They got to get the data center component of their business to be a larger component of their quarterly and annual revenue. Right now, it's too much of what goes into your laptops and your phones. That's not where the growth is. And yes, as you point out, Pete, as we've learned for a couple of years now, you can beat the street. But if your guidance is any remotely disappointing or even an indication that growth may not be continuing, they will sell you off. It's an interesting one to look at and keep on the radar because of how cheap it is.
Yeah.
But at the same time, when you're trying to figure out what to put into your data center and your AI darling portfolio, as we've started to refer to it, there are others with much more upside than this. This may be your grandfather's Oldsmobile of the chip space, and it might be just as slow to grow.
Yep, I had a nice Tornado back in the day. All right, we're going to go to
Darden. That. I can totally see you in that for sure.
Darden Restaurants. And how are they doing? Well, the sales are up. They're up 6%, but it was really interesting, Mark, when we were looking through this thing and you're looking at the earnings themselves and the fine dining, that wasn't so good. But when you look at some of the others, like, for instance, the Olive Garden, that was a crusher. They did absolutely fantastic there. But when they look at Capital Grille, not so much. Some of the other steak joints, not so much. There was one, however, that really did stand out, and it's because it's a little bit less expensive, Longhorn Steak. That was up with sales up 7.5%. So Darden, because of that and because of the mix of what they've got out there, that's doing pretty well today, Mark. It's up about 15%. The shorts are getting squeezed. There's about a 6 to 7% short interest in this name. Great cash when you look at the balance sheet itself and hit 52-week highs today. I'd say Darden is a home run, but it might be a read-through as well in terms of the upper end of things, in terms of trying to figure out where are people spending, where are they not.
Yeah, I mean, there's certainly an interesting story, and the stock is up strong for a stock that's performed pretty well. I mean, the 6 month, it's up almost 20%. Year to date, the stock's up 13%. So to have a pop like this today on the back of that kind of strength is impressive. This is not a sector that gets the kind of exuberance and the kind of PE multiples that the last sector that we just discussed, AI and chips tend to enjoy. But Pete, I totally agree. I'm looking at this for those reading of the tea leaves of what's going on with consumer behavior. And it's a little bit not what I would have expected, right? I would have expected to see more spending from the wealthier consumer going to the higher end, the Ruth Chris's of that end of Darden's portfolio, because they've got a pretty broad spectrum of fast casual, and even high-end restaurants like Ruth Chris. But the growth seeming to come from the lower and Olive Gardens of the portfolio, really interesting, and says a lot about that continued strength of the consumer and how this economy is performing even in the lower income band. And to top it off, of course, Pete, we had unusual in this one. Kudos to everybody that's in our UOA services. Came out just yesterday. Bullish activity. They came in buying 3,000 of the December 170s. Nice trade. We see how that performed from what's up there on the screen, but love it when the UOA supports and actually sometimes gives you a little indication of what might be happening in the next day.
Indeed, it does, especially when the stock goes from 170 to 187. All right, next up, we're going to go to SoundHound. Now, we talked about we got voice AI. If you want volatility, and I don't mean that to be funny or anything. If you want volatility, though, this is your stock, because the movements that they've made this year, Mark, are absolutely extraordinary. We were talking about that earlier when you brought up Micron. And I look at this one. This one has been all over the place. But of late, it's been going up, 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 up. Today, went up, up. And then all of a sudden, we started to see a little bit of a pullback. Why was it going up? Well, Dan Ives was out there talking about he had a price target of 10. Now he's got a price target of 22. That certainly did shake things up a little bit. The stock got all the way up. It opened around 22. It got all the way up just short of 24. Last I looked just minutes ago, it was trading in the 19s. Now, the market cap to start off the year, $500 million. Where is it now? Well, it hit $7 billion. That's the kind of moves that you see, and you just go, my gosh, 23% short interest. So some of these moves to the upside get exaggerated because those shorts start getting pretty nervous, and they are chasing SoundHound. Really interesting, extremely volatile. This is not for everybody. So you got to know what you're doing when you're part of this, because this is a stock that was in the very, very low single digits, and then look at where it is now. Incredible run, but that doesn't mean it's easy. It just means that you've got to be patient, and you've also got to understand when you want to hold them, when you want to fold them.
Yeah, for sure. Look, this is definitely one that's like one of those, extreme roller coasters. If you buy the ticket, strap in and close your eyes. But at the end of the day, Pete, this thing's up 800% on a year-to-date basis. And that chart, is there volatility along the way? Sure is, but that chart just continues to go. Look at that. That thing just continues to go up and to the right. This is a name that made it into our Market Rebellion Rebel AI Darlings portfolio. It's one we talked about. We started covering this thing, I think, back in July or August. We talked about it at 10X Wealth. We talked about it at Rebel Mastermind. We talked about it on the Celebrity Cruise 10 days ago, which, boy, I still wish we were on that. And we've had unusual in this along the way. We've had unusual. We've been able to share with our viewers and with the Rebel Nation. Take a look at that. Producer Justin popping it up on the screen. And one thing I want to just point out here, Pete, because this is where I really get excited about what we are developing here at Market Rebellion. As many of the viewers know, we have launched something called the Rebel Squeeze Play with the great Jeff Garbaz. And Jeff, when I saw what was happening in the stock a couple days ago, I pinged him and I said, Jeff, do your short squeeze voodoo on this. Tell me what you think's going on here. How much short interest is there? How is it performed? What should we expect? Do you think the shorts are actually done and clearing the decks for further upside to the stock? I asked them that question on Monday. I asked them that question on Tuesday. We came out with a note, gave some of that indication, said, yeah, there is still some shorts in there, but most of it's been cleared out. We see runway for further upside. We put that note out. We put it out through the Rebel Roundup and to people in the short squeeze service. The stock was up 24% on Wednesday. 24%. So if you followed that unusual and you got that additional validity from Jeff in the Rebel Squeeze Play and you put that trade on, man, you got a few more presents under your tree. And I'm really proud and happy to deliver that. Shout out to Jeff and the team behind the Rebel Squeeze Play. If you have not checked that out yet, folks, I encourage you to do so. Go to marketrebellion.com/get started to learn more.
And we talk about that all the time here on the Rebel's Edge. We talk about the shorts and, in fact, about the squeezes and all the things that can happen during some of those. You got to remember this, too, and then I'll jump up to our next stock. But you better be disciplined. You have to have targets. You have to have whatever it is that works for you, but a discipline of how do you actually react to that? Because the worst thing you can feel in the world is seeing something that just flies to the upside, you do nothing, and then it pulls all the way back. You need to have some sort of a style that you're going to take on that's going to give you the discipline to make at least some of the moves, something that you maybe put something in your back pocket on the way up. All right, next up, Accenture. Now, this one's pretty daggone interesting, Mark, and I say that because is it a stock that everybody wants to talk about? Absolutely not. But when you look at what they were able to do this earnings season, they did pretty well. They beat the expectations. They raised their guidance. And when doing so, their bookings was the thing that what really stood out. They're talking about Q1 bookings of $18.7 billion. So that's why the stock is going up about 7%. This is a stock that when you look at the free cash flow, they've got $8 billion in free cash flow. This is one of those names that might sound a little bit boring. It is not boring at all, especially for anybody who's a holder. This has had a really, really nice recovery and a nice move today following the earnings.
Yeah, I mean, look, what's their COGS, right? Their cost of goods sold, or just those Harvard MBA and Yale MBA people coming in. This is a McKinsey competitor, of course, telling you how to better run your business more efficiently. What I thought was really interesting, though, Pete, was the CEO and chair, Julie Sweet, talking about how much they're using generative AI to help deliver for their clients. If I'm Julie Sweet, and I'm not for a variety of reasons, obviously, I'm actually looking at AI and generative AI as a potential threat to my business. I don't necessarily need that team of 30 MBA and PhD consultants to come in and tell me how to run my business, when AI might be able to give me the same, even more precise and perhaps less interested comments and solutions. I'm not a lover of this stock. I think this is an area that AI will continue to eat into when it comes to market share. Congratulations if you owned it, but yeah, this one doesn't excite me. Pete, let's get into Pete's Red Zone Sports, and I'm going to play the Howard Cosell here and ask you some questions, because I've got some questions that I know are on the top of mind or tips of tongue for many Rebels Edge viewers. And since it is almost the year end, it's incredible that we got here so quickly. I'm going to ask you, in the NFL, smartest and dumbest moves in terms of player trajectory that were made this year by head coaches. What do you got?
That's a fantastic question, and I'm going to answer it with something we talked about a little bit yesterday, and I'll just briefly hit this. But the best trade or signing, or however you want to put it down, what general manager had the best? Minnesota Vikings. This is a team that at the beginning of the year, everybody's looking at them saying, well, you've got this quarterback, you love him. It's JJ. He's fantastic. You know, McCarthy, he's phenomenal from Michigan. He's done well. He gets hurt. He gets a knee injury. So now we've got to get a guy that named Sam Darnold that has not had any success anywhere along the way. And I know that you know that well because you're a Jets guy, and that's where he started off his career. Then he went to Carolina. Then he bounced around to a multiple different teams, San Francisco, you name it. The Minnesota Vikings signed this guy for almost nothing, which when you talk about quarterbacks, that's real money out there. And he did the right thing by coming to the Vikings. Why is that? Well, because JJ was going to be a rookie, unlikely to start, but maybe, but unlikely. So he gets a tight end in Hawkinson, who's probably one of the best in the entire NFL. He's got 3 receivers that are considered by a group, by far the best grouping of receivers in the NFL. And Sam Darnold now is a 12-2 quarterback that everybody's talking about. And the fact that his career has completely changed because of where he is and the players that he has around them. So that was the best. Here's the worst. I'm going to ask you a little bit about this one, but is it Aaron? Sorry, but is it Aaron Rodgers? In year 1, he hurts the Achilles. That's nobody's fault. That's something that can happen. Year 2, he's got a terrible attitude. He's playing okay at best, but the players and a lot of the guys on the team have kind of given up on him, maybe even given up on the coach. I don't know. But that was a lot of money that they spent there. But I think the very worst is Kirk Cousins. This guy who was here with the Minnesota Vikings, and I'm not saying anything bad about Kirk, but he also leads the entire NFL in interceptions this year with 16 of them. He got $180 million over 4 years. $100 million of it is guaranteed, and he's probably going to get cut at the end of this year. They just benched him, Mark, for the rest of the year. And this is a team that actually is in the playoff hunt. They're 7-7. They're right behind the Tampa Bay Buccaneers at 8-6. So they are in the mix to get into the playoffs, and they take this quarterback that they gave $160 million off the field, and now we're going to see what Michael Penix can do. I got a funny feeling that I liked Michael Penix. I don't understand why he had to slide to where he was. I thought he was one of the best in the draft. He's out of Washington. They had a great year last year. He had a great college career. It'll be interesting to see if he can direct this team with less interceptions and maybe a few more wins, because unfortunately Kirk could not do it. That had to be the worst, but I feel bad telling you about Aaron Rodgers, because it's year 2, but daggone it, the guy just has not come through at all for the Jets.
No, I mean, first he hurt his Achilles, then he hurt the feelings of Jets fans around the country and certainly in the tri-state area. I think, that $100 million guarantee was maybe the dumbest financial move, but the dumbest move in terms of putting a lot of eggs in a basket that has just not remotely delivered. And, you saw indications of it, Pete, with this guy's behavior, the ayahuasca, the not showing up for this, the going on his, vision quests and all of that. It's not what I want in a quarterback. So, yes, I have to give the Rubber Chicken Award for 2024 to Aaron Rodgers of the New York Jets.
Shoot. Well, I'll tell you what, it's a close race with he and Kirk Cousins. All right. Next up, Mark, we're going to talk a little bit about who's on the hot seat right now in college football. Here's the amazing thing. This just shows you how angry fans can be and how mystified they can be. I'm looking at Ryan Day. He's the head coach at Ohio State. Now, he, in 5 years as the head coach, Mark, has won 66 games and lost 10. It's not so bad, right? I mean, that's a pretty nice record. In the Big Ten, he's 46-5. They want his head and they want him out because he can't beat Michigan. He has struggled against Michigan, which is their biggest rival. We all know that. But this is a little bit on the crazy side because they're going to play a really good Tennessee team. If they lose that game, there's a strong possibility after going 10-2, he's going to get fired. I mean, I'm not just joking about that or saying that. Other people are saying that's a really strong possibility. Now, this is a guy who, yes, that game against Michigan, they needed to win that game. Michigan this year wasn't the Michigan of old. But nonetheless, it's a rivalry game. Things happen in rivalry games. They lost by 3 points. Their other loss was to Oregon, the best team in the country, the only undefeated school in the country. And they lost to them. The quarterback slid 1 second too late, or they had a very chip shot field goal that they could have beaten Oregon at Oregon. So it's really not like this guy's terrible by any stretch. As a matter of fact, the patience level of the fans just shows you how impatient they can be. But if you were the guy and you were the general manager or AD in this case, what would you do? Is it that big of a deal to lose to Michigan 5 years in a row? Because that is kind of a big deal, but to lose them 5 years in a row, and those are 5 of your 10 losses as a team, and 5 of 5 losses in the Big Ten. I don't know. What do you think?
Yeah, I mean, look, I think this guy is being treated a little bit harshly. I mean, a 66-10 record is absolutely nothing to sneeze at. And maybe we just need to put him into some therapy to figure out what the mental block is about figuring out how to defeat Michigan. You did so well over the rest of the conference. What's the issue here? But, Pete, I'm going to actually throw in a bonus question because I don't think you and I are going to be on together again beforehand. We might, but you never know. But on the assumption that we're not, must-watch Rose Bowl game. Do you got one?
You know what? You mean bowls just in general? I mean, I'll tell you what. When I look at the playoff, I think they got it right, number one. And actually, the game that might be one of the very best as far as what it's lining up to be, I look at this Ohio State and Tennessee game. You've got the SEC 10-2 team, the Big Ten 10-2 team, 2 of probably arguably some of the best teams right now in all of college football. It's really difficult to find a better game than that, but you can easily slide over and say, well, what about the Texas game? What about when Oregon gets their opportunity, and why are they in the slot that they are? It's so complicated and interesting, Mark, but I really do look forward to the Ohio State-Tennessee game because there are so many ramifications of if they lose that game, they being Ohio State, what happens? And they just signed a big player from the University of Minnesota as an offensive tackle out there at Ohio State. They are still doing well in the portal, but the portal is that's something you'd love to have a conversation about this sometime because there's a lot of screw ups going on. Marshall being the great example yesterday, 29 players left in the portal. So they had to cancel the bowl game they were going to play in. That's crazy.
Doesn't make any sense.
Yeah.
Well, Pete, it's Thursday, so of course tomorrow there will be no Rebel's Edge, which means between now and after Santa shimmies his fat butt down the Christmas tree, you ain't gonna see us. No Rebel's Edge on Christmas Eve, no Rebel's Edge, of course, on Christmas Day. I think the next scheduled Rebel's Edge is going to be the 26th of December, where you may see who knows who will show up. John will be probably on a raft with a soccer ball somewhere floating off in the Caribbean doing his best Tom Cruise impersonation. I don't really know. We'll see, but we will not sort of like the U.S. Postal Service. We will not fail to deliver for you, as we have not failed to deliver. I got to say, Pete, I am so proud of what our team has done in this fourth quarter of this year. It's just hit after hit after hit, win after win after win in our services. So, folks, if you like trades like that and you're still looking for that last-minute Christmas present, can I suggest you have a look at RebelCon? We are, of course, going to be bringing you the #1 live trading event of the year. This is March 22nd, MGM Grand, Las Vegas. We're putting a ton of time into effort into making this the best one ever. This will be day 4 of 10X GrowthCon, the 10th anniversary of that event. We're expecting 7,000 people to pile into that MGM Grand Arena to see Grant Cardone, Pete Najarian, John Najarian, myself, and a host of other luminaries addressing that crowd. This one is a do not miss event. And I got something. This was my Christmas gift and Justin's Christmas gift to the Rebel Nation. This one is completely free, but you can give it to people and tell them you spent a lot on it. That, of course, wow, producer Jared's reading my mind. Our inaugural research report. Folks, this is institutional quality research that you'd normally pay thousands of dollars for. This came out just a week or so ago, Pete. The response has been tremendous. We go in depth to help you understand how the explosion of data centers in this country is causing an existential crisis when it comes to the energy grid. And the companies that are going to help solve that problem, like OKLO, there's a chart you might want to look at, are poised to profit. We break it all down for you. 12 trade ideas, some pre-IPO ideas, absolutely free. All you have to do, scan that QR code, go to that website, download it. That's my Christmas gift to you, the great Rebel Nation. And until next time, Pete, always good to see you.
Good to see you as well. Have a great one, Mark.
Happy holidays, everyone.